Good afternoon, Gr.12. I'm Mr. Leo. Today we are going to do company ledger account. Now, firstly, there are some of the things that you need to take into considerations when you are doing with general ledger accounts. Number one, classification of accounts. Remember, we have elements of accounting equation, that is the assets, the owner's equity, the liability, the expenses, as well as the incomes. Now, when you deal with ledger accounts, you need to make sure first what type of account is that you are preparing. Number two, you must also remember the contra accounts. With contra accounts, you must also remember that for each and every transaction, we have more than one account affected. So you need to bear that in mind. Number three, we also have to think about the double entry system. With double entry system, you must remember for each and every debit entry, there is also a credit entry somewhere. So that is also very important when you deal with that. For example, in the companies we have about 8 unique accounts. Account number one, we have ordinary share capital. Number two, we have ordinary share premium. Number three, we have the retained income note, the retained income account, sorry. Number four, we have the SARS income tax account. Number five, we have the shareholders for dividends. Number six, we have the income tax account. Number seven, we have the ordinary share dividends account. The last one, number eight, we have the appropriation account. Those are the unique accounts under companies. Now, like I said at first, that we need to classify. You need to classify, remember, you need to classify the accounts in terms of assets, owner's equity, liability, and expenses. Because if you check now, when you classify, for example, assets, increases under debit side and decreases under credit side, with liabilities, increases on the credit side and decreases on the debit side. Now you need to make sure is the account asset account or a liability account, because you can see where asset increases, liability decreases. So it's very important to know if to classify the accounts, is the account asset, owner's equity, or liability. With owner's equity, owner's equity account increases on the credit side, decreases on the debit side. And then with expenses will increase on the debit side, decreases on the credit side. And then with incomes, with income account, they will increase on the credit side and decreases on the debit side. So it's very important to classify, to know how to classify the accounts. Now with contra account, you need to make sure that if this is the account there, and then here this is a detail of sundry, you cannot go and write again the same account there, because you see that will be the same account. So what we need account that contra that one, a different account to that, bearing in mind point number three, that is double entry system, that for each and every debit there must be a credit. So you cannot credit account of Leo with Leo. So it must be a separate entry there. That is the name of another account. Now if we go back to this ordinary share capital, this is owner's equity account, and then ordinary share premium, this is owner's equity account. The retained income is also owner's equity account. The big one, the SARS income tax, can either be a liability or asset. We'll come back to that. Shareholders for dividends, a liability account. Income tax, this is an expense account to the company. Ordinary share dividends is also an expense to the company. And then appropriation account is what we call the final account, the final ledger account. We use this one to classify, to close off the expenses. That is the expense, ordinary share dividends, as well as the income tax. We'll use this appropriation account. Remember, we are having three final ledger accounts, that is trading account, profit and loss account, and appropriation account. So we are going to use the appropriation account in this case to close off ordinary share capital, as well as the ordinary share dividends, and the income tax account, bearing in mind that only owner's equity account, liability account, and assets account will have balances, but income tax and ordinary share dividends as expenses, they are not going to have a balance brought down. So we close them off. We close them off against appropriate. Now if we go back, if we check, we said now ordinary share capital, this is ordinary share capital. Now we said this is an owner's equity account. It increases there and decreases there. Now what do we expect? Now it means firstly we are expecting a balance brought down of ordinary share capital to be on the credit side. There is no way that you can get it on the debit side, because remember we said this is ordinary share capital. This is an owner's equity account that increases on the debit side. Now ordinary share capital from the previous year will become balance brought down of the current year. That means the company is now starting the new accounting period with that much. So definitely it will increase the ordinary share capital. Now what do we expect? Again, we're expecting a company during the year maybe to offer some shares to the public, and definitely the shares will be offered to the public, and then the business will receive money for that. So that will increase the capital. So if it increases, it will also record that transaction under credit side. But if you don't know that ordinary share capital is owner's equity account, and the effect, it increases on the credit and decreases on the debit, you will end up recording under the wrong side. So that is what is expected from that account. Now ordinary share premium, we also said that this is an owner's equity account. It means it also increases on the credit and decreases on the debit, and then it's more or less the same as ordinary share capital. We're expecting it to have a balance brought down there, and then if those shares that were issued during the year, at some point they were issued at a premium, then we'll also have something there, bank, CRJ, and then we'll have the money there. You must also bear in mind the accounting cycle before the ledger. There is journals. That's why we are having folio numbers CRJ and CRJ there. Now if we take, for example, now the big one, the SARS income tax, information number 4 there, SARS income tax account, what do you expect? SARS income tax. Now you must also remember that when you have to prepare this account, SARS income tax, you must always indicate in brackets the income tax. You must write SARS, and then you open a bracket, you write income tax, because remember we are having about 3 tax amount that are paid to SARS. That is the VAT, we also have the VAT, and then we also have the payee, the pay as you earn. So it's very important to identify which income tax or the SARS account you are preparing. Okay, and then we also remember we explained that the SARS income tax can either be a liability or asset. It means as a company we can owe money to SARS, or SARS can owe us money. So we need to reflect that on the account. Let's check, for example, if we say SARS income tax, that means it can have a balance brought down there if it's a liability, and then it will also have a balance brought down there if this is an asset. It can also have a balance carried down, the closing balance there, and then we can also have a balance carried down there. So this is the situation, because we said SARS income tax can either be a liability or asset. That means if it's a liability, it will have a credit balance, that is balance brought down. Now we must also check this one to say if we are having this information that assets will increase there and decrease there, it means we're expecting a balance brought down of an asset account to be on the debit side. This is a debit side, this is a credit side, and then we're expecting a balance carried down of an asset account to be on the credit side. Whereas with a liability, where a liability increases on the credit side and decreases on the debit side, what we expect? We're expecting a balance brought down of a liability to be on the credit side and a balance carried down of a liability to be on the debit side. Now if we go back to that, it means if we are having a balance brought down of a liability, balance brought down of SARS account, that is a liability, it will be on the credit side. It shows there, will also indicate that on the credit side. Now if it happens that the balance carried down, the closing balance of SARS income tax, it's a liability also, it will be on the credit side. It will be on the debit side of SARS account, so it will be there. So that means the SARS income tax that will be there, it must be a liability, and then also that one is a liability. Now if it happens that the SARS income tax is an asset, the opening balance, what we expect? We're expecting it to be on the debit side, so it will go there. And then if it happens that a balance carried down, the closing balance of SARS account, it's an asset account, it will be on the credit side of SARS income tax. So you must bear that in mind, that we can have either we can have either two of this. We can have balance brought down, that is an asset, and then we can also have balance carried down, that is a liability. Or we can have a balance brought down, that is a liability of SARS account. We can also have a balance carried down, that is an asset account. Or we can have liability but with a balance carried down, that is also a liability. So that will be that case. Or we can have a balance brought down, that is an asset, and a balance carried down, that is a liability. So it depends. If we have asset, a balance brought down asset, and balance brought carried down asset, that will be the situation. Now what is also important is how to see when you check the question, how will you know that this time the opening balance is a liability? How will you know that the opening balance is an asset? It's also very important. Now when you check the information, what we expect, we are expecting SARS income tax. If it's a liability, how will you say? Number one, it must be on the beginning of the accounting period, that is the opening balance. It must be opening balance. Now for example, if we are given 2 years, 2008 and 2007, this will be the beginning. 2007 will be the opening balance. Now what do we expect? We're expecting this amount of SARS to be under the opening balance or the opening year, but we are also supposed to say we are expecting it to be either, if for example, if we have 3,000 there, it must be it must have a letter CR to show that. Now you must also remember, be careful here, CR does not mean credit, it means it's a liability, because remember, we want to identify if SARS is a liability, how will we see it, how will we know that it's a liability? So it must be on the first year and or the opening balance, and then it must have letter CR to show that it's a liability. If that is the case, then we know our opening balance, the balance brought down, will be there as credit side, as balance brought down under credit side. Now if the 2008, the closing balance, let's say for example is 2,000 rand, and then it also have letter CR, it means both liability, both amounts, the beginning and the closing balance, they are both liabilities. So we'll have situation whereby we have the opening balance, it's a liability, and the closing balance is also a liability. So we'll have balance brought down on the credit side as well as balance carried down on the debit side. You must remember we said liability cannot have balance brought down and balance carried down on the same side. So liability will have balance brought down on the credit side and balance carried down on the debit side. Now if it that the same example, we have in 3,000 there with letter CR and 2,000 there with letter DR. Now you must also remember DR cannot mean debit in this case. It will also it will represent that this is an asset account. So we'll also record that. So what are we going to do? Now in this case we are having balance brought down, that is a liability, opening balance, and we are having the closing balance, that is a asset. Now this is an asset because it's the closing balance, is balance carried down. That one is the opening balance. We're expecting this to be the beginning of the accounting period, and this one will be the end of the accounting period. So what are we going to do? In this case we'll have now the opening balance, that is balance carried down as a liability. It will come there as balance brought down as a liability, and then because the second one it's a balance carried down but it's an asset, it will be on the credit side also. So we'll have both amounts on the credit side because that one is a liability, this one is an asset. Remember the first one is liability and it's the opening balance, so it's balance brought down of a liability. The second one is the closing balance, so it becomes balance carried down of an asset. Balance carried down of an asset is also on the credit side, so we'll have both amounts there. Now if it happens that, for example number 3, if it happens that we have 3,000, it's an asset DR, and then 2,000 CR, that means we'll have the opening balance as an asset and then the closing balance as a liability. Now what are we going to do? We're having the opening balance as asset. We said the balance brought down of an asset will be on the debit side. It means we'll have the balance brought down there. And then the closing balance, because it's a liability, and then we'll have it as it's a liability, but it's a closing balance, that is balance carried down. So it will also be on the credit side. So SARS will have a balance brought down as asset and a balance carried down as a liability. So this is very important because when we go through some questions, you need to make sure about that, especially. Okay, and we are done with that. The third one, or the number 5, we also have ordinary share dividends. With ordinary share dividends, it's not a problem because we said ordinary share dividends, it's a liability. It cannot be an asset like SARS. We said SARS can either be a liability of asset, but that means it has only one entry because it's a liability. Ordinary, this will be shareholders for dividends. We'll have balance brought down there, and we cannot have balance brought down on the debit side because this cannot be asset account. And then what we expect, if we pay this, because this is the dividends we are owing to shareholders, if we pay that, because liability, we said it increases on the debit side, credit side, and decreases on the debit side. Now if we pay, it means we'll be decreasing what we owe to our shareholders, so we'll have bank there as an entry. But at the end of the year, we'll also calculate how much is owed as dividends, and then it will create an account called ordinary share dividends, and then we'll have the amount there. So that is shareholders for dividends. So you cannot have situation whereby your credit, your balance brought down will be under debit side. So it means you'll only have balance carried down on the credit side. So that is the story, because that one it will remain a liability. Now with the number 6, the income tax. Remember we said income tax is an expense, and then we also said expenses increases on the debit side. When you create an expense, remember we said expenses increases on the debit side and decreases on the credit side. Now when we create account income tax, we'll have situation whereby the income tax, remember it's an expense, so we'll only record on the debit side because we said it increases on the debit side. And then we'll have an entry there, SARS income tax. It will be there. If we remember this is not paid, we'll only calculate at the end of the year. We calculate how much is to be paid to SARS as income tax. So you cannot write bank there. If you pay tax, then you'll be paying SARS income tax. So that will only be recorded in the SARS income tax account there, because remember we said SARS income tax, it's a liability. It increases there if it's a liability and decreases there. So we are expecting a bank to be there if we pay something for income tax. So remember we said the income tax is an expense account, so we don't have balance brought down and balance carried down, so therefore it will be closed off against appropriation account. So the same figure that is there will be the same as that one to show it was closed off. Number 7, dividends. We also said this is an expense account, so it will also have entries on the debit side. If it's an expense, we'll have ordinary share dividends, and then what we expect, we're expecting to pay some dividends. If we pay the interim dividends, we'll write bank there, and then we'll have the figure there. If we declare the ordinary share dividends to be paid to shareholders, then we'll have shareholders for dividends there. Now you must bear in mind that you don't just write bank the first time and shareholders for dividends the second time. You must also check the question. The question will direct you. It must be stated clearly somewhere in the question that interim dividends were paid. If the interim dividends was paid, then we'll have bank there. We'll only write bank because it was paid. Then remember it comes from the CPJ if we pay, so we'll write bank there. But if we only declare, remember if we declare the dividend is not paid. If it's paid, then we write bank, but if it's declared, we write shareholders for dividends. So you must be very careful when you deal with that account to say whether the dividend is paid or is declared. It determines the contra account that must be written there. Remember we said you must write a contra account. You cannot write ordinary share dividends there. We also know that ordinary share dividends and shareholders for dividends, those are two different accounts. This is an expense account. We said that this is a liability. So you cannot make a mistake of writing ordinary share dividends in the details of sundry column in the ledger account. That will be wrong, because we said we need to follow the contra account system as well as the double entry system. So we need double, we need at least 2 or more account affected. So we need also to consider that when we prepare the ledger account. Now for the last one, the appropriation account. This is a big one. We said it's a final ledger account, so it will have a profit and loss there, and then it will also have, let me show it on this page. We'll have appropriation account. Remember we are appropriating now the income. We will have profit and loss there. This profit and loss, you must bear in mind that it must be profit before tax. It's very important. You indicate profit before tax and not any other profit there. It must be profit before tax and not profit after tax. And you must also bear in mind that profit for the year is profit after tax and not before tax. But here, under appropriation account, we record profit before tax. And then it will also have a retained income there. This retained income is the retained income as at the beginning of the year. When we are given information, you must also check that. And then on the tax, it will be there from the income tax account. Remember, we said the income tax account will be closed off against appropriation. It means we are expecting that amount that was calculated for the current year for income tax to be recorded there in the appropriation account. And then we'll also have the ordinary share dividends. Remember, we said ordinary share dividends is an expense. So after recording those two, we'll add the two and then we'll close it off against appropriation account. You remember we talked about double entry system. Ordinary share dividends will be credited with appropriation account. Therefore, appropriation account will be debited with ordinary share dividends. And you must also remember, when you are not asked to prepare ordinary share dividends and you are only asked to prepare appropriation account, for amount of ordinary share dividends, we need those two amounts. We need those two amounts, that is the ordinary share dividend that was paid as well as ordinary share dividend that was declared. That means when we prepare appropriation account without ordinary share dividends, we'll have to use the bracket there to indicate the figure that was paid for interim dividends plus the figure that was declared, and it will give us that figure. You don't indicate one amount there. You indicate both the amount that was paid as well as the amount that was declared, except in the account for ordinary share dividends. Then we'll have to calculate them and record them separate. The one that was paid and the one that was declared, we record that separate. But when we close it off, this amount will be the total of these two. Then it will go there, and then it definitely goes to the account of appropriation account. And then we'll also have retained income. The retained income will be the closing balance of retained income at the end of the year. Now you must also bear in mind that we said the appropriation account is a final ledger account, so we don't expect balance brought down somewhere and balance carried down somewhere there. So it's very important to know that. And then what we also need to also include principles here as number 4. Remember, we talked about classification of accounts. You must decide when you prepare that ledger account, is it asset, owner's equity, liability, expense, or income, and then the contra account and the double entry system. Number 4, we must also know the framework or the structure of that account. Because remember, when you prepare a appropriation account, like in this case, you need to know exactly which items comes on the credit side and which items will come on the debit side. Otherwise, we'll end up mixing the items or swapping the items, indicating some of the items on the credit side which belongs to the debit side and so on. So we'll also include or the structure of each and every account. You need to make sure that you know exactly how the structure lies. Thank you very much. And then let's check the question. This question was taken from the control test of March this year, 2013. Now it says that Josie Ltd has authorized share capital of 400,000. The company, the par value of each share is 2 rand. All shares have been issued to the public. Now remember, when you read the question, you just don't start. You don't just start with the answer sheet and start entering the details. You must also first check and read the information there. I've highlighted some important information, so when you have a pencil in the exam, you'll be underlining some of the important information so that you don't get lost. when you answer that question. So if you check there, already it's indicated there that 400,000 shares is authorized, and we don't want authorized shares. We are only interested in the issued shares. So those shares were authorized, but we'll see when we calculate. Now we are only interested in the question, this one. It says here, required, complete the following ledger accounts for the year ended 29 February 2008. So we are going to prepare that account. The first one is SARS income tax. So we are going to prepare that one. Now what do we do? Now we check there is the account in the answer sheet, and then we must prepare SARS income tax. What we said with SARS income tax, we said SARS income tax can either be a liability or asset. So it can either have a balance brought down on the debit side and a balance brought down on the debit side. So we need to check first. Now if you check the information there, it says the details extracted, we are there. It says details extracted from the balance sheet on 29 February 2007. Remember they said there we must prepare the ledger accounts for the year ended 29 February 2008. That makes now this date, 29 February 2007, the beginning. That is the balance brought down. Now when we did with SARS income tax, we also explained that SARS income tax can either be asset or a liability. Now in this case we used only the CR and the DR, but SARS we can also be identified. If SARS is under trade and other payables, then we know it's a liability. If SARS is under trade and other receivables, if it's indicated there, it means it's an asset. So it's either it's trade and other payables, or it has the letter CR to indicate that SARS is a liability. To indicate that SARS is an asset, it will be indicated under trade and other receivables, or it will have a letter DR. So that is the story. Now if we check this one down, so we are expecting our balance brought down to be on the, we are having balance brought down. Now if you check there, it says trade and other payables, SARS income tax, and then the amount is there, 8,422. It's not indicated there anywhere that is it a debit or it's a credit, but we explained that you must also remember that SARS, if it's under trade and other payables, it's a liability, or if it has letter CR, it's a liability. So that this one, 8,422, is a liability, and we said liabilities will have a balance brought down on the credit side. So with our answer sheet here, we'll record there on that date, we'll record there balance brought down 8,422. Now what is the meaning? The meaning is that the company, our company, Josie Ltd, is owing SARS at the beginning of the accounting period 8,422. Now what we're expecting? We're expecting, or we expected as a company, to pay back the SARS. Now let's check. The following transactions took place during the year. When on 24 March 2007, what happened? Check number 3462 and check number 3463 were issued to settle the outstanding amount. This is the outstanding amount we are owing in respect of income tax. Remember, when we pay the income tax, we are paying the income tax to SARS. And then it says in respect of income tax and dividends on ordinary shares respectively. So remember, if it says check there, it means it was paid. And if it was paid, then the account there will be bank. And then if you read the transaction correctly, we don't have any amount indicated there that the business paid that much. They only say the check number 38 that much and check number that were issued to settle the outstanding amounts. Now you must go back there and see that if it's trade and other payables, it means this is the outstanding amount for SARS income tax. This is the outstanding amount for shareholders for dividends, that is 10,000. So on this date, 24 March 2007, our company paid the amount that was owed or that was outstanding to SARS. So we'll check that in the account. So therefore we'll have now on that date, 2007 March 24, we'll have bank there because the amount is paid. And then the folio will have CPJ. Remember we said before ledger there is journals. And then how much was paid for, 8,422 was paid. And then if you continue to check, we are done with the first one. The second one, it says the accountant calculated that 40,000 provisional tax was due to SARS and check. You remember, if it's only due, it's not paid. But in this case, they say the accountant calculated calculated that 40,000 provisional tax was due, so it's only due there, but to SARS, and check number 4120 was duly issued. So for the fact that the check was issued, it means now the amount, the 40,000 was paid as provisional tax payment. So this will be indicated also on the ledger to say on August 31st, bank there because it was paid. The folio will definitely be CPJ, and then the amount is 40,000 because it was paid. If we move October 17, it says an interim dividend of 10 cents per share was declared by the directors of the company. We are there. It says an interim dividend of 10 cents per share was declared. So this will affect dividends on ordinary shares when we prepare information number 2 there. We'll also do that. But remember, when you are in the exam, because you are also having answer sheet there, you can immediately record October 27, 17,000. You can immediately record that transaction at the same time. But we'll move that. We'll come back to that. If we check now February 18, it says the second payment of a provisional income tax was calculated at 41,400, and check number 4911 was issued. So on that date, February 18, let's check there, it's supposed to be February 18 there, bank, because the amount was paid, and then the folio CPJ, and then 41,400 was paid. So we are almost done with that account. Let's check now the last part. It says February 29, what happened? The net income for the year amounted to 207,500. A final dividend of 15 cents per share was declared. This will also affect the dividends. The total tax liability, for the year amounted to 83,000. So this is not paid. This was not paid because they say there it's a total tax liability. So we only